$100 billion has been wiped from the ASX in a session, marking its single worst day since early in the COVID pandemic. The ASX 200 fell sharply on opening and went down from there. It is the second consecutive sell-off, sparked in part by fears the US is heading for a recession. Losses spread across all sectors, but IT, financial, energy and real estate stocks were hardest hit. The ASX 200 and the All Ordinaries finished the day 3.7 and 3.8% down. Cryptocurrencies didn't escape the carnage, with Bitcoin down by 18%. The Australian dollar is down by 1.7%, buying just below 64 US cents. The reasons for the sell-off are twofold, according to Wilson Asset Management's lead portfolio manager, Matthew Haupt. But he says the primary explanation rests with the Bank of Japan's decision last week to lift the cash rate from artificially low levels that impacted the carry trade. That's a strategy where investors borrow a low interest rate currency for investment elsewhere.
Yeah, it's been a very negative day today on the ASX. I mean, predominantly this is a combination of events last week accelerating. I mean, it's very much the yen carry trade unwinding and a deleveraging across risk assets. So we're seeing this accelerate today, and it's likely to continue. In these deleveraging environments, they're very, very sharp and very quick, and they fall quite hard because these carry trades are obviously leverage trades and they unwind very quickly. So that's what we're seeing across markets at the moment, and this is affecting all markets globally.
What about investors' fears in the US that a recession there is now more likely than not?
Yeah, I mean, at the moment, we've really got two reasons why the equity markets are falling. The first is the carry trade, and the second is the slowing job environment in the US. We've seen the job market hold up really strongly for most of the year, and now we're starting to see some weaker prints come through. And I mean, last Friday we had the non-farm payrolls, and that was weaker than market expectations. So all of a sudden there is questions around the durability of this economic expansion and whether we're going to have accelerated rate cuts going forward now.
Where were the biggest losses on the ASX and why?
I mean, the biggest losses we're seeing are stocks which are really positive momentum stocks. So what happens is in up markets, people are leveraging up and putting money to work in these names. And what we're seeing at the moment is a deleveraging event. This happens quite sharply. So the stocks that have had the most momentum will be the first to fall and have the largest falls. And we're seeing that in the market at the moment.
The CBA stock is down more than 5%. Are we now seeing the revaluation of bank stocks that many analysts said had to happen?
We are seeing a revaluation of banking stocks. I mean, the Australian banking sector got to extreme valuation. So what we're seeing now, we would argue, is a healthy correction in the Australian banking sector. But if we were to move back towards more normal levels, there is still a lot of room for Australian bank shares to fall if we were to return to price to books in the normal range. At the extremes, CBA was trading over 3 times book value, which is really unheard of on a global scale. So what we're seeing now is a momentum unwind, and Australian bank shares have a lot further to fall if we were to go to historical valuations. So it feels like the sell-off in Australian banks is not over yet. So we're watching this quite carefully.
The sell-off appears global. Some Asian stock markets temporarily suspended trading to stem the losses. How long do you see this route continuing?
Yeah, so the Asian markets were put in limit down situations today. This is probably a function of the liquidity pools being a bit smaller than the European and US markets as well. So the deleveraging is quite severe because the carry trades are leverage trades. So what we see is a very sharp grab to liquidity. The Asian markets are not as deep in liquidity, so we're really watching European US markets to get a better read on this situation. But at the moment, it looks like this liquidity event is ongoing with no circuit breaker in sight in the immediate term.
Markets are now betting the US Federal Reserve will deliver a 50 basis point cut in September. AMP's chief economist Shane Oliver says the RBA should consider cutting the cash rate tomorrow. Do you agree?
I think we'll see the RBA deliver a hawkish hold. What they will cite is some of the market volatility as concerning, but they're also trying to navigate a similar route as the Bank of Japan, where we have a domestic inflation problem which they don't want to endorse further rate cuts. So I'd be very surprised to see any deviation from their normal any move is possible. And I think what we'll see tomorrow is a hawkish hold, but citing concerns around global markets. But I wouldn't expect anything dramatic or different from the RBA tomorrow.
Matthew Haupt, great to speak to you.
Thank you.